Good morning, students. Today, I, Ankita, is going to explain you the third topic of your chapter number 1, that is the scope of macroeconomics. Firstly, you must know that what do you mean by scope? Scope basically means the field or the area of study, or you can say the topics which will be covered under the macroeconomics. These are the 7 points which relates to the scope of macroeconomics, that is estimation of national income, theory of money, role of government or the government budget, theory of employment, theory of general price level, foreign exchange rate, and the balance of payments. These are the points or the topics which we will cover under the scope of macroeconomics, or you can say that these are basically the names of your chapter of the book Macroeconomics. So the first one is the estimation of national income. Under the first point of yours, that is estimation of national income, it includes that macroeconomics relates to estimation, definition, and various aggregates or terms related to national income. Firstly, you must know that what do you mean by this term national income. You can define it as it refers to the sum total of all the goods and services produced in an economy during an accounting year. That means it is basically the income generated by the production activity in a particular economy during an accounting year, right? And it relates to various aggregates like GDP, that is gross domestic product. NDP is also known as net domestic product. NNP is called net national product. We will do all these terms in detail in your next chapter, that is the national income, right? Now the next point covers under it is theory of money. It is the next point of the scope of macroeconomics, and a separate chapter is also there in your book called money, right? So it relates to creation or control of money or credit by commercial banks. Now firstly you must know that what are the commercial banks. Commercial banks can be defined as the banks which has two main functions. Two main functions are accepting deposits, that is, as we know, when we have extra money to save, we go to the banks and deposit our money. And the second function is to grant loan. To grant loan. What do you mean by that? If anyone is in need of any money, they takes credit or loan from the commercial banks. And the example of commercial bank is SBI, that is State Bank of India, or you can say Punjab National Bank. Another one you can say is OBC, that is Oriental Bank of Commerce. Then you can say another one, you can take any other example, Canara Bank. What are these? These are the commercial banks, and they have the role of creation of credit. Creation of credit. You must wonder that from where do the banks get the money to give as loan? Do you think that each and every sum of money is given by the RBI to the commercial banks? No. The commercial banks accepts deposits from the public, and from among that only they give the loans to the public. Whole of this process you will study in your chapter money and banking in your book, right? The next one we will study under it is the role of central bank in money supply. Now what is central bank? Central bank is the note issuing authority of our country or of any other country. Like in India, Reserve Bank of India is the central bank. What is the role of the central bank? To issue the notes or the currency in the whole economy, and it also controls the money supply. Money supply means either they see the situation in the economy, and according to that they may either increase the money supply or decrease the money supply. Clear? I am just giving you a brief explanation, so you don't need to worry. We will study in detail each and every concept in your respective chapters. The next point under the scope of macroeconomics is role of government or the government budget. As we know that government plays a major role in an economy, as we are living in a democratic country. So the democratic role is provided by the government. Government plays a democratic role in our country, and government helps in making the policies like fiscal policy, also called budgetary policy. Now what is that? You must have heard that in the February the finance minister of a country, that is Srimati Nirmala Sitharaman, has presented the government budget, right? उसमें उन्होंने क्या बताया था? She explained or showed that the estimation of revenue and expenditure of the government, that is from where the government will generate the revenue and where the government will spend the revenue generated, and the basic motive of that is the government is the growth and stability of the nation. Now growth refers to the GDP growth, which we have already studied, and stability refers to that there must be a stable condition. You can define government budget as a statement of expected or estimated revenue and expenditure of the government during an accounting year with the objective of growth and stability. Generally, this budget is made by the government in the month of February, right? For example, now our Finance Minister Srimati Nirmala Sitharaman has made the budget in February 2020 for the year 2020-21, right? So it refers to the estimation or the expected values which is being recorded before the start of an year. Now for the year 2021 to 22, the budget for that year will be prepared in February 2021. Clear everyone? For it is prepared basically for an year. Now the next one is theory of employment. Theory of employment is given by Keynesian. He is known as Keynes. Clear? We can say it as Keynesian theory, in which he gave the causes of unemployment. Now you know what is unemployment. Unemployment in simple language is known as berozgari. That is the people who wants to work at the existing wage rate but are not getting the work. That is known as unemployment. So in this theory we will learn that we will come to know about the causes, that what are the basic causes of unemployment in an economy, and the Keynes has given various measures to correct the situation of unemployment, that is how we can tackle the situation of unemployment in a particular economy. As we know that unemployment is not a good situation for a country, therefore we need to correct it as soon as possible. The next point under the scope of macroeconomics is theory of general price level. Now what is general price level? It refers to a hypothetical measure of overall prices of some goods and services in an economy during a given period of time. Now what is hypothetical? Hypothetical means that assumed. Basically in the general price level, the government calculates the estimated or the assumed prices of various goods and services on the level of which the situation of inflation or deflation is known by the government. Now what do you mean by inflation? Inflation means rise in prices, जिसको हम in normal language कहते हैं महंगाई, right? You must have heard that with the increase in the demand of the sanitizers, the prices have been risen of the sanitizers. That situation is called the inflation. And now what is deflation? When the prices becomes very much low related to normal price level. When the prices become very much low as compared to the normal price level, that situation is called deflation. And when the prices rise to too much extent because of the rise in excess demand, that situation is called inflation. This all we will study in theory of general price level. And because of this inflation or deflation, the situation of inflationary gap and deflationary gap comes in our economy. Clear? The next point is foreign exchange rate. Now what is foreign exchange rate? It is the rate at which one currency is exchanged for another currency. Basically when we want to exchange our Indian rupee with the US dollar, what we need to do is to exchange our currency and the rate at which the currency is exchanged is known as foreign exchange rate. For example, if we want to exchange $1 or if we want to get $1, what we have to pay is we have to give 76 units of Indian rupee, right? So what is that? That is foreign exchange rate. Similarly, if we want to exchange our Indian rupee with any other currency, the rate at which we will exchange our currency will be known as the foreign exchange rate. Now here comes the last point, that is balance of payments or BOP. Now what is that? It is a statement of accounts which shows monetary transactions. Now firstly, what are monetary transactions? The transactions which are related to the money, clear, of a country with rest of the world during a period of time. As we know that we conduct exports or imports. Now what are exports? Exports are when we export the goods of our country to another country, or when we sell the goods from one country to another country is called export. Now what are imports? When our country, for example India, is importing or purchasing some goods from another foreign country, let's say from USA. Clear? What will be that? That will be imports. Now where these exports and imports be recorded? These will be recorded in BOP. BOP is balance of payments, which is a statement in form of T, right? Like you prepare your accounts, it is also in the form of T, form of accounts. In at one side debit transactions are recorded and on the other side credit transactions. Now debit transactions are the one because of which we have to give payments to another countries, that will be recorded under debit transactions, and credit transactions are the one because of which we will receive some money, that will be recorded under the credit transaction. So exports will be recorded credit transaction and imports will be recorded under the debit transaction. So this is known as the BOP account or balance of payments account. This was all about your scope of macroeconomics. Thank you.